before COVID, people thought, well, you have to be in person to execute an M&A deal. And COVID showed that you could take multi-billion dollar companies public. You can do mergers and acquisitions
Sure.
all through Zoom. And the technology evolved very quickly to enable that kind of environment. So it made it a lot easier for us to do work. Our clients didn't care if we were in their region, in their town or anything. And it really made, like, I think, middle market investment banking brokerage from like a regional siloed business to a nationally competitive business.
Welcome to Business Ninjas, brought to you by Write For Me, where you'll hear from business leaders who are out there growing their business and slaying it every day. Learn from the masters. Let's get started.
Welcome to another episode of Business Ninjas. I'm here today with Jay Jung, founder and principal at Embarc Advisors. Jay, how are you today?
Doing great, Andrew. Thanks for having me.
Oh, my pleasure. I appreciate you spending some time with us on Business Ninjas. Please tell us a bit about yourself and about Embarc Advisors.
Yeah, so I started Embarc Advisors about 7 years ago. Before that, I was an investment banker with Goldman Sachs. I started in New York, where I covered more traditional industries like industrial and natural resources. Then I moved out to San Francisco, where I covered tech. So I sold Yahoo to Verizon. I sold MuleSoft to Salesforce.com and a whole bunch of other large and small deals. Prior to Goldman, I was with McKinsey in their corporate finance practice. So doing similar work, more of a strategy angle to it back then. And then about 20 plus years ago, after the dot-com bust, I did a network security startup, raised money from SoftBank and some other VCs. Did that for a few years. Ultimately did not pan out. So I always like to joke that technology is a lot harder than finance. The idea behind Embarc for us was to kind of bring that top-level advisory that I learned from Goldman and McKinsey to the middle market. So startup founders, business owners that are kind of growing and really in need of that kind of high quality advisory as they look to their next steps and work towards an exit.
Thank you. By the way, you rattled off a few rather substantial deals there very quickly in your introduction. Those are 9, 10 figure sorts of conversations that we're talking about there.
Yeah, those are big deals. I learned a lot from them, and I'm hoping to kind of bring that experience and toolkit to middle market deals that are more like 7, 8 figure deals.
Gotcha. Now, when you say middle market, what verticals are you servicing at Embarc? Is there a particular industry or type of company that you work best with?
We're industry agnostic. So right now, our clients are everywhere from software, hardware, business services, healthcare, industrial, consumer, et cetera. And my background, when I was a banker, I sold everything from coal mines, chemical plants, power utilities, oil and gas, and then also semiconductor, software, internet companies, et cetera. And really, I think M&A is a functional expertise. The vertical specialization, frankly, is a convenience for a sales and marketing perspective. Because if you're a banker that covers IT managed services, it's very easy. You just keep going to the same conferences, you keep meeting the same people, and it's a lot easier to sell. But I think from an M&A expertise perspective, it's much more beneficial to work across different industries and see different situations, work with different types of buyers. And that's why when you look at the top investment banks like Goldman, Morgan Stanley, or Evercore, the M&A bankers are more industry agnostic. And
Now,
we try to practice that here.
when you're agnostic, does it become more challenging to reach in specific industries and companies, or you just sort of put yourself out there as experts in the broad space of M&A and they come to you?
Yeah, I think you need to really have the confidence that you differentiate on the quality of execution and advisory, not on understanding of the industry. And, for us, we leverage some of the learnings from our software clients to our business service clients. We leverage learnings from our industrial clients to our healthcare clients because we see so many different types of deals, and there's always learnings from different aspects that we can kind of port over. So I would say it's a slower go-to-market motion. But at this point, after doing this for 7 years, I think we just ranked on Axial's top 25 middle market investment bank list. I think people appreciate the quality that we bring, and it's the differentiated level of service. So for us, that's going to be our winning strategy, not so much like, oh, we really know a certain sector well.
Gotcha. And what are the typical problems that you're solving for your clients?
We approach it more holistically. It's not just about, oh, okay, let me package your business, go find a buyer and close the deal. And first of all, we don't take a success fee. I think what makes us very different is we bill hourly. So we take more of a kind of consultant advisory role when it comes to M&A. We're not a broker. We don't get paid on close of the deal. We bill hourly like a law firm, which means when the deal gets done, our fees can be much lower, but also it means that we get paid every month. So initially we, focused on the M&A part. So we'll help a company get ready, get them ready really well, like we did for Yahoo or MuleSoft, and then run the process in a diligent manner, like we used to at Goldman. And then also, like even after the LOI is signed, we're there handholding them step by step, problem solving on aspects that are even beyond finance, all the way to a close. And we'll even support on the post-close adjustments if necessary. And then we realized middle market firms are not like Fortune 500 companies. They don't have as much support. So we started building out our own financial diligence, quality of earnings team, because we wanted every client to go out with a quality of earnings, because that's going to position them for success. So the hourly model allows us to do more work. We just bill more hours. But it helps, it pays dividends down the road, and it's a very high ROI investment. And furthermore, now we're getting clients that come to us and say, I'm thinking of selling in 18 months. I'm thinking of selling in 3 years. Can you help us, have the best exit possible? And we have a CFO team that's taking companies through IPOs, worked on their private equity owned portfolio companies. And so they have the experience and the capabilities to get a company ready to sell, even if it is a 2-3 year timeline. And most investment banks aren't set up to do that because they only get paid on the sale. They can't invest 3 years worth of work to help a company do the nitty gritty work to optimize that. So for those reasons, I think we're very different in how we approach M&A and an exit for a business owner.
Well, it's a very different business model than I'm aware of in your space. I hear people complain about the length of the sales cycle and how many hiccups between here and there in terms of disclosure and negotiation. And I would think for most advisors, it's cost prohibitive to take on a client that says that they're not going to sell for 18 to 36 months because nobody's getting paid till that's done,
Right.
if that's done. So no, that's a very interesting and innovative approach. I can see that working on both sides of the fence. Plus, at the end of the day, when they close the sale of their business, a huge chunk of it isn't disappearing day one to go to you. That makes a lot of sense. Tell me about the COVID years. I mean, I'm under the impression that M&A was busier than ever as small companies struggled to survive and had to be acquired to survive and things like that. Tell me about the challenges and opportunities that the COVID presented to Embarc Advisors.
Yeah, so COVID was interesting for us. I mean, we started this in 2018. So frankly, the first 2 years was really just myself. I'd have a contractor to support me here and there. I wasn't even sure if there was a real opportunity, because my life, whether it was a McKinsey or Goldman, was really serving the Fortune 500. So I wasn't really sure if there is an opportunity. But after 2 years, I saw the need. I saw that there was a market opportunity to serve clients in the way that we aspire to do so. So in 2020, I decided to fully commit and say, hey, I rebranded and reincorporated and hired my first full-time employee in November 2020. I thought like COVID would be like a 3-month thing. I'm having lived through like SARS in Hong Kong. I thought it would be a short-lived. Little did I know it would be a 3-year thing. But I would say COVID was in some ways positive for the business environment for us, because we were always remote from the get-go. We never planned to have an office. And in the beginning, when I said we're remote, people will look at me and think that this is not a real company. But after COVID, when I said we were always remote, even before COVID, we don't have a corporate office, that became a perk because they knew that we would never ask people to come back to the office. So it became, and it also legitimized the business model of the operating model of being fully remote. So it actually made it a lot easier to bring in top quality talent to the firm. So it helped with our hiring. And also before COVID, people thought, well, you have to be in person to execute an M&A deal. And COVID showed that you could take multi-billion-dollar companies public. You can do mergers and acquisitions, all through Zoom. And the technology evolved very quickly to enable that kind of environment. So it made it a lot easier for us to do work. Our clients didn't care if we were in their region, in their town or anything. And it really made, like, I think, middle market investment banking brokerage from like a regional siloed business to a nationally competitive business. And so our clients are all over the place, even in states where we have zero presence. So for us, it actually was a blessing in disguise.
It's an interesting shift in perception, right? The idea that you must be fly by night if you don't have an office to, oh, they're more efficient. And I'm not paying for a 10,000 square foot high rise office with a lot of expensive suits in it. It's a very big shift in perception. I mean, the old days of, these contracts were done across very large, expensive tables in very high rent buildings with very expensive suits at the table. And that was required. That perception of substance was necessary. And COVID allowed us to say, hey, wait a minute. All of that is window dressing. Either you are or not a great advisor in this space. And who cares whether you're at home in a polo or you're in a three-piece suit in a high rise.
Right.
You are still the same person at the end of the day. So that's a huge shift. I see that as being a positive across the board. Yeah. Shift gears to the marketing end of things. How's Embarc telling its story? What role has content played in the growth of Embarc Advisors?
I would say content marketing has really been at the crux of how we approach the market. What we found is the middle market is vastly uneducated when it comes to M&A. And it kind of makes sense because from an M&A perspective, larger deals are actually easier to get done because you have a big team around it, they're audited, they have a more experienced management team for all those reasons. And they pay more. Bigger deals have bigger fees. So naturally, if you're a great investment banker, you want to keep moving upstream to bigger and bigger deals. And so we had a lot of bankers at Goldman where they might not have started at Goldman, but through their hustle and grit, they kept switching firms and eventually landed at Goldman to work on 9-figure, 10-figure deals. What happens is there's a hollowing out in the middle market, especially the lower middle market, where let's say deal sizes between $100 to $200 million. I don't think they're getting the best advisory because the best advisory all goes upstream. And I found that people were starting to take interest in M&A because there's so much private equity acquiring these businesses, but they did not really understand to a deep level. And so, about a few years ago, we realized we have a lot of good content coming from where we are, but there's no way working with one client at a time, we're going to go disseminate that message. So we really took to content marketing. I think at the end of the day, it's really all information that's out there in the public domain. It's just not packaged and delivered to the middle market. So it's not like we have a secret sauce. We're just kind of becoming a megaphone. We're filtering the relevant content and then doing a megaphone to those audiences. And so I think that kind of content has really differentiated us. We're very active on LinkedIn. We have a newsletter. We try to post our blogs with relevant content and not just trying to do what everyone else is doing, but when we really have something that's differentiated, unique. So, I'm a big fan of content marketing. And I kind of tell my clients to do that as well.
Well, as a civilian, I have to tell you the idea of $100 to $200 million deals as being small to middle market is a little frightening, but hey, that's a different world that you live in. Now, we are in pretty volatile times at the moment. And it seems like investments in the health sector and tech sector are drying up because people want to find things that are a little more stable. What's that impact on your business and what you're seeing?
Well, these are moments where we're excited that we are a very diversified firm in terms of certainly sector exposure, but also in terms of how we support clients. So yes, it is very volatile times. So deals that are exposed to tariffs, federal funding, those deals are on pause. They're getting a lot more scrutiny, but we have lots of other deals where they're domestic services, not exposed to immigration, federal funding, or tariffs. And we see even more attention focused on those businesses because, private equity capital has a clock on it. It's a 10-year fund that wants to get deployed in 5 years. So when you bring a great opportunity like that, everyone's focused on it. So it's almost a better opportunity for certain businesses to go out. And then from a services perspective, when M&A slows down, usually, business owners, entrepreneurs, they never rest on their laurels, right? So they're always thinking, well, what can I do now if I can't do a deal at this moment? And so our CFO services has picked up significantly because people are thinking these are owners of 30-year-old businesses. They've gone through cycles. They know cycles will always turn. So how do I get ready for the upturn? And they're investing in, our CFO services to kind of get them ready for that, raise the financing, maybe do acquisitions, or be ready to sell when the tide turns. So it's good diversification on our part from a business model perspective.
Well, hey, it's another great reason to be agnostic in your approach to M&A and not be industry specific, because you might be in trouble if you were in the tech or health sector at the moment, because things are waiting around for things to change, or at least to understand what the end game is before people throw money into those sectors. What's next for Embarc Advisors?
Well, we continue to grow. We just brought on 3 new associates, I think in the last month and a half. We're ramping them up. I think we have 2 roles open now. So, right now I would say really our bottleneck to growth is our ability to hire great talent. And we're very picky about who we hire. So it does take some time, but I think it's worth it. And I think we're firing on all cylinders for all 3 of our business units around CFO services, quality of earnings, and M&A. I think there's, probably additional areas that we can continue to expand into. And I think that's kind of like the visionary entrepreneur's shortcoming, where I want to keep spreading. But I recognize that we need to kind of drill down deeper and continue to kind of build the bench at this stage. So exciting times. I think there's a lot of growth potential for the firm.
Excellent. Look down the road a year from now. What are some things you'd like to be celebrating personally and professionally?
Well, a year from now, I look forward to celebrating my baby boy Ian's first birthday. I think that will be a huge milestone. My wife and I have been married for over 10 years, so this is a real blessing. Professionally, a year from now, I hope that we'll have a more mature management team that's kind of growing into their roles. This is the first year that we've implemented EOS, the Entrepreneur's Operating System. And so we've set some lofty goals for ourselves across revenue and other KPIs. So I hope a year from now we'll look at that and say that, we worked hard and we achieved most of our goals. So it's a
Excellent.
bit of a transition period.
Great. Please tell us, what's your URL? Where can people find Embarc Advisors, and what social media outlets you use as well?
Yeah, it's embarcadvisors.com, EMBARC advisors.com is our website. I'm generally on LinkedIn, also under Embarc Advisors or Jay Jung, Embarc Advisors. I think my LinkedIn handle is Embarc, EMBARC. So pretty easy to find. I post pretty frequently, so would be great to get a follow.
Excellent. Jay Jung, thank you for spending some time with us on Business Ninjas. Congratulations on your expanding family. Continued success at Embarc Advisors.
Thank you, Andrew. It was a real pleasure.
My pleasure. Be well.